Even within deep tech, there are a variety of flavors, so I don't think it's a one size fits all. One is, like we discussed, it's going to take time to build. Sometimes 2 years, sometimes 4 years, sometimes even crazy longer. Be very large companies, they could be R&D companies, they could be companies such as Google, Samsung. They could be just plethora of companies where there is an R&D, deep technology culture, talent pool very strong within that organization. Founders, if they have spent time there 5 years, 10 years, 15 years, they don't know their domain very well. Founders should have spent time in that domain. Typically, at the heart of a deep tech product and a business is some unique technical insight. And therefore, from a deep tech perspective, there has to be that tenacity and that additional level of patience, obviously from the investors, but most importantly from the founders who understand how to build this, and they are building for the long haul. But the flip side of that,
Hello and welcome to another episode of the Startup Operator Podcast. I'm Roshan Karyappa, and today on the show we have Arjun Rao of Speciale Ventures. We haven't had an investor on the podcast for a long time, so Arjun bucks the norm. He's the exception. There's plenty of things that we can learn from Arjun, particularly on this phenomenon of deep tech. It's been in the news and it's all the more topical now. So we're going to dive a little deeper, try to understand the nuances of deep tech in India and how deep tech investing specifically is different from the others you might have heard of or be familiar with. Welcome to the podcast, Arjun. Thanks so much for making the time.
thanks, Roshan. Thanks for having me. Super excited for the conversation.
Awesome. The thing that really piqued me about your portfolio and the profile and your thesis and everything is that you guys were early on deep tech, right? Deep tech has become very sexy. Let's start with deep tech investing. That's something that piqued my interest when I saw your portfolio. You have a bunch of these amazing startups, and you guys were early in on this specifically, right? India deep tech was not so obvious, 5 or 7 years back, but of course a lot has changed over the years. Before we dive into investing per se, right? Let's talk about deep tech itself. Let's double click on that. Now, deep tech could mean material science, it could mean space tech, it could mean, perhaps half a dozen other things that that I'm missing, right? Could you define what is deep tech in your opinion?
I'll try. It's a tough one because, like you said, it's a very broad definition. It is different things to different people. 2-3 things that we consider that formulate what a startup is building is in deep tech, right? We of course invest in both hardware and software. On the software side, the obvious things are cutting edge AI, machine learning, computer vision, cloud infrastructure, data infrastructure, security. While these are quite familiar to the rest of the world, they're still fairly sophisticated in tech. So that's the flavor. The more interesting part, which we also strongly focus upon, is what we call hard tech or frontier tech or deep tech, usually at the intersection of more than one of the following disciplines, right? Or flavors, which is engineering, hardware, sciences, and software. Correct? And maybe one or two or more of these concepts are typically coming together to solve some really complex problem in different industries, right? So that's a very broad way of looking at it. The very exciting way of thinking about deep tech is it is usually at the convergence of more than one science or craft or thesis, and that is very exciting when things come together. These days, hardware is never just hardware, right? Usually, hardware has software flavors, right? There is either AI that is powering software. We have there is either simulations. There is either self-driving cars, which is hardware. There are self-driving EV cars, which has material science. Then there's cars, but then they're driven by AI. There's just so many. Then there are sensors, right? There are a wide variety of things. So for us, one of these things, which is say engineering, hardware, sciences, and software coming together in some form or shape makes it hard, deep tech or hard.
On that note, right? I mean, I have spoken to a few of these hardware folks as well, and any good hardware company ends up building the software stack as well.
Yeah.
I think the standards are not like very common. Perhaps now, I mean, it's obviously evolved, right? B, I mean, if you are at the cutting edge, then you want to control every aspect of your solution, right?
Yes.
So
No, I think Apple is a classic example, right? You not only build amazing phones, right, but you build the software for it, you build the chip, you build the operating system, you build everything, right? And then that control on the overall stack makes the experience so much better. One for the end customer, but also most importantly, there aren't too many people, right, out there in the ecosystem who can build these subsystems and subcomponents that fit into what you are building and give the same customer experience. So that's fairly true across the ecosystem. Of course, as a ecosystem matures, I think you see more and more subsystem providers, component providers who also do a high quality job and do good job of integrating. And we are starting to see some of those, but definitely there's value in vertical integration, so to speak, and building the full stack yourself. And therefore, a hardware company or a deep tech company, typically the skill sets required are multifold. And that's an important part about what goes into building hardware.
right. Would you say there are any other unique attributes? I mean, one of the other things that I could certainly think of is that the iteration cycles are, far longer, right? I mean, it's not like your typical, let's say, your SaaS
Yes, yes.
startup, right, where you just ship out an MVP in about a month and then you figure what next.
Yeah, no, I think that's a absolutely important consideration. That hardware or deep tech solutions take time to build, right? Why? Because they're probably expensive. The iterations and the uh, prototypes that you have to build and iterate and get it right, and particularly all the components coming together, all of them is slow. It's not like like you said, you put out a software, you fix a bug on the go. If something gets wrong, you push a quick fix or a release. When a hardware product goes out there, it stays out there, right? Bringing it back and then iterating, it's a long cycle. So definitely the gestation periods, the way one does iterations in hardware, and how engineering and prototypes and both design as well as specific engineering aspects, etc., it all is time consuming. And therefore, from a deep tech perspective, there has to be that tenacity and that additional level of patience, obviously from the investors, but most importantly from the founders who understand how to build this, and they are building for the long haul. But the flip side of that is to say, because it is so hard, because it takes time, not too many people are building it,
That's also the
right?
mode.
And therefore, that's a automatic moat. And therefore, you're not going to have 20 competitors building the same thing. You probably are going to have 3 competitors, maybe 5 competitors, depending on skill set and the tenacity that we spoke about. But time is an important consideration in deep tech in terms of how long it takes to build out MVP, proof of concept, version alpha, beta, and then the final version that is commercial, right? And probably you can't put anything out until you are in real commercial state, because there's no point of putting out a alpha product or a beta product. You can showcase it and show that it works, but it's not yet probably ready to go into customers' hands, because in hardware and the nature of the beast, you just can't put out something incomplete. How many new use cases it opens up and how much value they can create in the market. Just an example.
Right. And for all of these reasons, it's all the more integral for these startups to build with their potential customers, right? I mean, I come from the enterprise SaaS world, and obviously, we don't build the product in isolation. We can't just build and put it out there and
Absolutely.
expect that people will institutions will kind of use them immediately, right? So, how do you get these folks to build with their potential customers? What is the mindset?
No, I think it's interesting, and again, even within deep tech, there are a variety of flavors. So I don't think it's a one size fits all. But I'll try and give some broad commonalities there. One is, like we discussed, it's going to take time to build. So sometimes 2 years, sometimes 4 years, sometimes even crazy longer, right? But let's say it is a few years to build out a product. Now, like you said, product should not be built in isolation just because the founders have some insight, right? And they believe that's the right product. So what we are always very specific about and particular about with our portfolio companies is, even though it's taking time to build, please talk to customers early. Please talk to a wide variety of customers early, and with your core hypothesis of your deep tech product, start finding the best fit customers very early and tell them what you are building. understand their problems, correct? Adapt your solution towards it. Now, co-building can be done sometimes, but I would say listen to your customers, but understand what are the common pieces to build across a wide variety of customers, right? Which have similarity that you can sell the same product to multiple people, and therefore speaking to many, many customers and keeping them engaged from the very early stages, correct? So, what if your product is going to get launched 4 years later? Correct. I think being in conversation, understanding their pain points, understanding why they will buy, when they will buy, at what price point they will buy, all of that can be input to how you are building your product, what features you are prioritizing, what how frugally you are building the product, because price point becomes apparent over a period of time. Then you say, hey, I cannot be spending, my product cannot cost 10x, it has to cost somewhere in the 1 to 3x, because that's when the market will adopt it, correct?
Right.
While 10x value can get created, but at what price point? Right, we can take the example of a Tesla, right? Yes, it's a premium product, but there's a limit to how much people are going to pay. But Tesla is a phenomenal product, great vehicle, almost no parallels out there, right? Long range, great performance, great look, great design, sophistication, etc., etc. And then, therefore, they could price a premium. But they would have seen that, hey, they started only in North America. And even within North America, if we see closely, they started only in California, right? And therefore, because there was propensity to pay. So understanding the customer mindset, problems and solutions, and therefore all of these things from the beginning is very critical. The other aspect of working closely and speaking with customers right from the very beginning is, at some point in time, if you tell them the concept and what you're building and you keep them involved and say that, hey, I've made progress, while it's going to take 4 years, in the first year I've built one subsystem, in the second year I've built second subsystem, I've integrated them, and things are coming together, we're making progress, right? That's great way of keeping the customer engaged and confident, right? And building confidence. They might along the way give you letters of intent, correct? They may not give you purchase orders or invoices, of course, because you're not still ready. But if they have confidence, they'll give you a vote of confidence. Say, okay, or how are you building this? They will ask you technical questions. That's sort of a little bit of a validation. That's a little bit of diligence, right? And when they give you letters of intent, right, that's a great validation actually for you to go out and raise more capital, right? Because capital is not an easy problem to solve in these long gestation cycles from investors for these founders, correct? Unlike software, consumer, and other verticals. And therefore, letters of intent can be good proxies for orders, right? Orders are going to come in the future, but you can start lining up customers and they're giving you confidence that they will buy. And if they write a letter of intent, you can use that in your pitch to your investors to say, see, this these set of customers have evaluated us, have given us a vote of confidence, and here's a letter of intent, correct? I'll give you examples. We have one of our best performing portfolio companies in fund one, which is Agnicool, is building a 3D printed 100% 3D printed rocket to take satellites up to lower earth orbit, correct? We're all very excited about this company, and they are very close to their first launch, right? Hopefully anytime soon. And they've been talking to customers for the last 5 years, and they have tens of millions of dollars in LOIs already lined up, right? Already, so which is a very, very strong pipeline. And once they are commercially ready, a fair bit of that with some conversion ratios will convert into real customers. And that is a strong validation, of course, for the founders to keep them going through the early phases. But more importantly, also along these phases, when you need more capital, you can go and show this to investors and raise rounds 2, 1, 2, 3, 4, 5.
Among the many different startups that you've invested, are there specifics about the team itself, the kind of team that succeeds in deep tech?
Again, honestly, we're also early in the cycle, so success is yet to come. So it's a long journey. There are, of course, a bunch of good companies that are breaking out and getting to key milestones. So we're also learning. Having said that, there are some traits that we have now sort of, probably there are some patterns that we have seen of where do people come from, what backgrounds, what motivations, and what skill sets, right? Two, three things, right? Unlike little more mainstream domains that we have spoken about, deep tech, by default, hard problems, skill sets being complex, you need deep skill sets and deep experience. So it's not like somebody's going to wake up one day and say, I'm going to solve a very, very tough deep tech problem. Unlikely that's how founders are going to come across. Founders are going to come with a fair degree of time, experience, and depth spent in that domain where they're solving a problem, right? And that could come from academia. They could be research, doing PhDs or masters or postdoc, right? In institutes, right? Be it the IITs or programs in the West or the IISCs, etc. Right? And through their research and through their academic work, they've stumbled upon some unique technical insight and a big opportunity, and then figured out the commercial application of that. That's definitely one very strong source where deep tech founders originate from. The other one could be industry, corporate itself, right? Which is, have they worked at companies that do cutting edge work, right? They could be very large companies, they could be R&D companies, they could be companies such as Google, they could be companies such as, hardware companies such as National Instruments, they could be companies such as Samsung, there could be just plethora of companies where there is a R&D, deep technology culture and talent pool very strong within that organization. And they in general are building complex products and hard products. And the founders, if they've spent time there 5 years, 10 years, 15 years, again, they don't know their domain very well. Correct? In space tech or aerospace, it could be you worked at Boeing, Airbus, you could have,
Been with Israel or something.
yeah, variety of these companies. If you're in semiconductor, you could have worked at semiconductor, you could have worked at Intel, you could have worked at AMD, you could have worked at some other place. Some of our robotics portfolio founders, they come from National Instruments, which is like a watering hole for different type of sensors, different type of automation systems for manufacturing, right? So industry and corporate watering holes is the second strong area where we find founders have to come. So simplistically put, I would say founders should have spent time in the domain, should have depth of experience and understanding of the technical landscape where they are solving the problem. And through that time and that depth, they should have arrived at some unique insight, which is what they're bringing to the table and saying, this is the insight that I have. Typically at the heart of a deep tech product and a business is some unique technical insight, right? That the founder has come through experience and time.
Right. Now we spoke about some of the points of failure. I'd like to delve a little more deeper on that, right? What are the common points of failure? I mean, it could be commercialization, for instance, right? I mean, where maybe an idea is truly cutting edge, but is not really great from an ROI perspective, or there aren't too many buyers for something like that, right? Yeah. Or that it may take too long to get to the market, and by the time the circumstance or situation has changed. Are there any other common points of failure that you notice among deep tech startups?
No, I think you've rightly articulated a couple, right? However good the technical solution, is the final product a need in the market? Does that move the needle for the customer in terms of what value it can generate commercially? So understanding that and bridging that gap between great technical innovation to phenomenal product to commercial value, and therefore the possibility and the ability to build a great business around it, right? So that if you don't bridge just a great technical solution, you will fall short. And if you get too fascinated just with the technology and the quantum jump of technology, and it's very easy to do that, right?
Yeah,
particularly for founders, they come from that, say, wow, I found a breakthrough, it's awesome. And it is awesome, it is non-trivial, but is it ready? Does it solve a big problem? Does the customer need to move? Is the reason to move compelling enough in a time bound fashion that you also spoke about, right? If they're not desperate, they can take their own sweet time for adoption. If the price point is too expensive, you built a great product, but you ask them for also 10x more higher price. No, it's not worth it, right? So very important to understand all of that, right? I think timing super critical, like you said. Too late, obviously, too many competitors, etc. Too early is a reality in our world, right? It is well before your time. Correct. The market is not ready. Some other pieces of the puzzle haven't come together. Why your product can be adopted? It's not the customer wants to adopt it, but there are some other things holding back the customer why they cannot use, right? Maybe they have already, let's say in manufacturing, they have already invested immense amount of capex in some automation systems and on their shop floor and on their manufacturer system. And if you go to them with a brand new automation or a robotic solution, for example, it works, but it only works if they drastically change their whole setup. How much, right? They've already invested, let's say, tens of millions of dollars or hundreds of millions of dollars on capex, let's say, in the last 3 years. They're not going to change all that instantly, right? So that inertia will kick in. So timing matters, right? We have seen, for example, we've made investments in the augmented reality, virtual reality space. Honestly, if you look back and see that domain, there are, of course, some use cases emerging and have emerged, and there are value. But AR, VR has been talked about now for a decade or longer.
Yeah. It's been the next best thing for the last 15
Exactly.
years.
But is it mainstream yet? No, we're not really going around wearing AR glasses and experiencing the world in AR. We are it's a very small surface level usage. So it's an example of it's always been ahead of its time. Now it may happen today, it may happen 5 years down the line, it may happen 10 years down the line. Right? So critical to
yet
find the
to-
right timing.
Yet to see that inflection.
Critical to find the right timing. The third only thing I'll say is again, which is tied to point one is, if the founders are too fascinated and founders are not being savvy about commercial, not talking to customers, just building in a rabbit hole, right? And forgetting to talk to customers so that at the right time, if they find some strong signals from the market that their original hypothesis was not valid, they still have the ability to pivot, right? They should be adaptable. It's very important. So what if your original hypothesis did not work? You can only figure that out by talking to customers constantly, even while you're building the product. So if you forget to do that, or if you just sort of think about it as a little more academically and from a let's keep building in the lab. I know what this means. Let's keep iterating, next iteration, next iteration. And you spend 1 year building in the lab and then go out and ask a set of customers. And then customer says, no, this is not great. I don't really care about this. You lost a full year. Correct? And with capital not being abundant yet in this ecosystem, which is getting better, but you might only get 1 or 2 shots at it. And if you lose a year, you may not get more capital for a second shot at it, even though you may have a great technical solution. So I think all of these things one has to balance out. The only fourth thing I'd say, additional thing, which is hard to time, is probably policy. Right? In a lot of complex areas which impact society, which impact government. It could be space tech, it could be like self-driving cars, it could be EV, for example, right? You need a little bit of policy, government support, push at the right time for adoption, right? It could be some subsidies, some ease of capital or capex or customer adoption, etc. We have seen this in the explosion of EV adoption in India, right? It
The
wasn't
famed
there
two
6 years ago,
subsidies.
but the famed subsidies, right? We've also seen this in the space tech, how privatization of space. All of India was about ISRO, right?
Yeah.
It was government run and all of that. There's privatization, and we took a cue from the West where NASA partnered with SpaceX, etc. And the Indian government and ISRO also, rightly at the right time figured out that they cannot build everything. So it's a great thing for them to partner with startups and with the private ecosystem. So a lot of these examples are coming through. So timing of policy sometimes is critical. We at Speciale believe that typically innovation precedes policy, that if enough innovation comes through and starts knocking on the door of the government and policy, the government should ideally wake up and will wake up and say, okay, let's make it conducive for this entire ecosystem to really benefit and make this, new wave happen. So that's the factor to remember. If policy support doesn't come at the right time, there could be some tricky situations.
Right. What are the 2 or 3 most exciting things in deep tech right now? I mean, you've invested in a bunch of these different sectors within deep tech itself, right? If you could talk about some of the major narratives that are defining deep tech, let's say maybe you could start with space tech.
Sure. No, I think definitely space has been one of our early, bets, and we have been early within the ecosystem in India to take those opportunities or take those shots. And some of those companies are doing phenomenal. We have 5 portfolio companies within space tech between Fund 1 and Fund 2. And it's a plethora across the space ecosystem. We have a rocket launch company, Agnikul, which we mentioned. We have Galaxy Space, which is Earth observation. We have satellite communication called Astrogate, right, for better inter-satellite and satellite to ground communication. We have downstream AI and analysis of Earth observation, satellite data for enterprises and defense. And very recently, we invested in a company called Inspexity, correct, which is doing in-space service and repair of satellites to extend life of satellites in space, with the ultimate goal of setting up manufacturing and cities in space. Sounds science fiction, but very, very exciting.
What is the convergence of factors that is leading to so much of an interest in space tech? I mean, it feels as though suddenly over the last 5 years, I mean, we're hearing so many names, so many people getting into this. What do you think caused this?
No, I think it's a critical question, right? Of course, one, it is so cool and exotic. It does catch your attention, but peel the layers of the onion and understand, is there a real business opportunity, right? And right at the very beginning, and we probably invested now close to 5 years ago when our first deal that we did, which is Agnikul, right? And of course, we saw that in the West, there is a classic example of Elon Musk building SpaceX, Blue Origin coming from Bezos and multiple others, but they were the pioneers, and Musk, of course, was a pioneer. And privatization was even a possibility, right? Otherwise, this was always the case that nationally governments did, right? NASA did, or ISRO did, or European Space Agency did, or somebody else did, correct? But that was the first time it was shown that so much was happening that privatization was needed, and private enterprise could do that. So that you need some motivation of that nature. The important thing from a timing perspective for the whole ecosystem was actually a convergence of a few technology trends, which is, electronics, chips, and electronic systems and subsystems that go into building satellites, correct, became smaller, cheaper, and faster to build. Correct? And typically, if you look at it very, very high level, satellites do one of two things. They do either communication, which is internet and, sending data from, from ground to satellite and back, etc. And then they do Earth observation, which is imagery, capture images of the Earth so that we can have a better sense of what is happening across, Earth. Correct? Of course, there are some newer, interesting, exciting use cases emerging, but number one and number two are these. Now, what has happened historically was satellites were really big, right? There were hundreds of kilos size, or even bigger, right? And all the electronics were bulky, the systems, the sensors, the chips, and they had to be space pedigree and all of that. It's very complex. And then you needed energy, you needed charge, right? How does it continue to operate in space? So many subsystems and components, they used to be very bad. But as technology evolved, all of these things became cheaper, smaller in size, which is miniaturization. And therefore, anybody could start building a satellite, right? There were student projects that were building small satellites, micro satellites, nano satellites, etc. So size, cost, and speed of making satellites is the barrier that was broken, I think, somewhere in the last 10 years because of the subsystems becoming more nifty. Which is to say, again, if you look at our mobile phones, we have great, really small sensors, we have small batteries, we have lenses, cameras, so many things, right? That's exactly what was only available in really big systems are now available in the palm of our hands, correct? And that translated there. When that is possible and the cost is very low, more and more people want to build satellites. And the use cases are clear because you want communication and you want Earth imagery, because Earth imagery has so much applications. Weather, mining, ocean tracking, right? Agriculture, insurance. There are like hundreds of use cases, right? Of course, defense and national security in times of war and just like hundreds and thousands of use cases. When these two things converge of what is possible, then people are making satellites. If you are making more and more satellites, which is tens and thousands of satellites are getting built very quickly at low cost and small, then they all want to go up, which means you need transportation system, which you need different, newer, and more types of launch vehicles. Correct? And that is why ISRO needs launch vehicles. ISRO is making launch vehicles. NASA is making launch vehicles, ESA, but also SpaceX is doing, also Blue Origin is doing, also Agnikul is doing, so on and so forth, right? You need more launch vehicles, you need more transportation, and then you need it at cheaper, correct? What is it going to cost to go from here to space? And then you got to send something to lower Earth orbit, to middle Earth orbit, and to lower, to geos, which orbit, and so on and so forth, which use case. So all of this is tying into the space ecosystem. Then once a satellite is up there in space, it is capturing information and it has to beam that information down, either in imagery or communication, right? And that's an OpEx. So you need better communication systems, right? So that is a entire ecosystem that is happening. Now, once the data starts coming down, then you need downstream, which is AI, imagery analysis, software, all of that, computer vision, all of that, right? And then you go out to different industries and solve their problems. So all of that is, and now to take it to the next level, let's assume there were only few hundred to thousands of satellites in space. Then it becoming tens of thousands of satellites in space. There are newer problems in space. There is collision. They're all moving around in orbit, right? There could be collisions between satellites, correct? So there could be damage. So you need some anti-collision systems. You need some mapping solutions. You need anti-collision. If collision happens, then you need debris collection, because debris is also floating around in space, right? Which can again cause further damage, which is all actually a risk to reducing the life of a satellite in space, right? You make a satellite, you spend a lot of money making it and then sending it up to space. Then if it lasts only for 4 years, it's not great. Or if a damage happens and it lasts only 2 years, can you extend the life of satellite? So can you refuel, right? Can you fix a problem? Can you do some in-space servicing? So newer problems are emerging because there is traffic in space. Correct? So it's just connected all of this. So all of this is just a humongous economy. It's a space economy. And we're not yet even talking about, the recent Chandrayaan thing and going to Mars and finding rare earth metals or, unique stuff.
Mining, yes.
Asteroid mining. It's starting to happen. But why? Because we're running out of some certain, elements and metals on Earth, and we need it for the human race to continue to prosper and survive and do many, many things. Right. So very, very exciting opportunities. And that's how that ecosystem has prospered.
Fantastic. Yeah. I think it's such a unique position that we're in with space tech, especially, right? I mean, we have some of the cheapest payloads, right? Comparable anywhere in the world, right? And also the right sort of geopolitics to kind of favor us also,
Absolutely.
right? I mean, we're in neither camp, right? And so that is a huge boost as well. So I feel like we are right now positioned over the next 5 or 10 years, and with this Chandrayaan 3 mission as well, to sort of become a commercial space superpower.
No, I think it was it's you're bang on. I think we're super excited about the opportunity ahead, and it was definitely one of our reasons to pick it as a strong sector within deep tech early on, right? To say, does India have an edge, right? And we believed and we figured that because of ISRO's history of constantly doing cutting edge stuff at frugal, with very frugal resources, look at what we have done, right? And that has to translate. So we have know-how, we have skill sets, we have institutes of great eminence here with aerospace programs, right? Which means talent is there. Lesser of this talent is leaving the country now, correct? As opposed to before, because of the
Do you see
prevalent
that?
opportunity.
I mean,
Definitely.
So there is
Definitely.
I mean, the people have hinted at a sort of a reverse brain drain and so on, but we still, I feel, lag behind on those like quality research centers and so on.
No, I
we're
think
improving for
it's
sure,
we are
but
nascent, right? What we have
yeah.
to acknowledge that the arrow, the directional trend of progress is in the right direction. There's no question about that. Now, timing 5 years, 10 years, 15 years, 20 years is hard. And it's incumbent and, it's all our responsibilities to collectively do it, right? You can get talent, but you need research hubs. You can get talent and research hubs, but you need commercialization. You need all of this. You need capital from VCs, right? It all has to come together. And then along the way, we need some wins, right? No VC ecosystem of any kind succeeds without some big outcomes. Correct. So all of this is happening, right? Definitely. I don't know numbers, but definitely like I graduated from engineering more than 20 years ago, right? How many of my classmates would leave the country for greener pastures and for a better professional outcome, right? I think it was a very high proportion. There is still a proportion. It's not that nobody's leaving the country, but I think that number is substantially reduced, which means a lot of people staying back. Second, little bit that you said, which is the reverse brain drain with me. After spending a few years there, either doing your PhD and then working in cutting edge organizations in whether Silicon Valley or MIT or Boston or New York or whichever the hubs are, and then learning what is world class and having built world class stuff within larger, then if you come back, let's say after 10 years or 15 years, and then you build here, that's also happening. Correct? And both of them are great signs. And now the rest of the ecosystem has to come together. I think all our educational institutes, most of them, the IITs, the IIScs, are doing a phenomenal job. Right? Again, some better than the others, some two steps ahead of the other. But everybody's doing a phenomenal job to say, okay, let's do better and better research. Let's tie this research very closely to academia, to industry, right? And for commercialization, and work with startups, work with VCs to figure out, hey, can research from IIT and ISC be converted into a startup, commercialized and taken to market, right? IIT Madras is a great example. ISC Bangalore is a great example. IIT Bombay is a great example, right? I think professors are coming ahead and starting companies. We have two professors in our portfolio that are founders, right? Agnikul as a co-founder, advisor. ePlane, the founder, is Professor Satya from IIT Madras. Professor Arjun is the founder of Inspexity, right? So it's a new breed, right? And they're also looking to the West, how Stanford's, MITs of the world have developed, and how it is great just feeding into that ecosystem and creation of IP. So I think we're definitely at an early inflection point. That's what makes it very exciting.
Fantastic. Any other sector that you want to talk about? I mean, that you're perhaps equally excited about?
No, we're definitely excited about multiple areas. What else have we done? We have done things in broader climate tech space. Right. Again, an interesting aspect is we never thought, or we did not default say we were doing climate tech, but we were doing deep tech. But more and more deep tech solutions were actually solutions to solve the climate problem.
They have a sustainability impact.
Yeah, they had an impact built in. That's what they were doing, and they all needed hardware solutions or some permutation combination of sciences, engineering, hardware, like we already spoke, right? So we did EV very early, right? We have a company called Ultraviolet Automotive.
Yeah.
Right, we're building high-performance electric motorbikes.
We had them on the podcast maybe 2.5 years back. I think we're probably going to host them again.
Yeah, you should host them again now because the bikes are on the road.
Neeraj and Narayan, yeah.
Absolutely, right?
The bikes are absolutely amazing.
Yes, great looking bikes, and most importantly, great engineered bikes.
Yeah.
World-class engineering.
Amazing. Yeah.
Great range, great power, great high quality battery systems, and the software and the hardware, and of course the aerodynamics and the design and the aesthetics. It's like a Tesla or an Apple, right, for India. So it's lots to learn. So that's an example. So the point there is we learned a lot about EV. Correct. We also did the ePlane company, which is electric VTOL for urban air mobility, right? So again, I had understanding of battery systems and the EV side. We've invested in battery recycling company. We've invested in a new cell company, a different type of cell, again, that goes into either EVs or other use cases. So that's very exciting. So that's the entire gamut. That led us to go into different types of cells, different chemistries, think about matter-rare batteries, think about hydrogen fuel cells and other things. We ended up doing a hydrogen electrolyzer company called Nutrace, which is very exciting, correct? Hydrogen is a big ingredient into a variety of industrial applications. It's an input material, and there is a lot of push globally to convert the kind of how hydrogen is generated is, also generates a lot of greenhouse gases, right? To reduce carbon footprint of manufacturing of and generation of hydrogen. So you have to go from regular hydrogen to green hydrogen. And that's a big push policy-wise, again, Europe, America, and India. So that was a great opportunity. So if you see in the climate gamut, we've done a variety of things. We've also done, interestingly, a water company, that company called Uravu that captures water from air, from the humidity. If you looking 10 years, 15 years, 20 years ahead, particularly in dense urban areas, we are all running out of groundwater, and water is going to be a challenge both for, just for, you and me using it, as well as for commercial use cases, industrial use cases. So we've done a gamut of things in that landscape, and all of this is super exciting for us. The other couple of quick sectors I want to give a shout out to, which we are spending more time now, the semiconductor angle in India is, there's a right time. Maybe there's a geopolitics angle there again, right? We are in neither camp. China is sort of a blocker for a lot of the world. We could replace them in a bunch of things in manufacturing, and of course, chips are now at the heart of everything, right? Semiconductors are needed for pretty much everything we do today, correct? So it's a very interesting, time in time in the ecosystem for semiconductor development. So we are spending time there. The other aspect, which is sciences and bio, correct, which is biotech, synthetic biology, drug discovery, and again at the convergence of, for example, AI for drug discovery, or using software and other tooling to do alternative molecules, proteins, alternative food for that matter. Just exciting things happening there, so that you can reduce carbon footprint on doing a lot of things, right? Any material or any input ingredient going into any industrial or non-industrial process, which is animal sourced or plant sourced, if you can replace that by making that in the lab, correct, then you're making the world a greener place, right? So very exciting. They're all overlaps a little bit with climate, some with geo, and some, right? There are patterns here, and we are excited about all of these areas.
I'm old enough to remember when there was this common refrain that India only does services, and we're not building any IP and so on, right? But yeah, listening to you makes me feel very, very optimistic. I think there's a ton of great things that are being built. Let's switch gears and talk about investing per se, right? Clearly you're very passionate about these innovations and so on, but do you think the traditional VC fund structure kind of supports deep tech investing? How is it kind of different? How do you model your returns? What is unique about deep tech investing per se?
No, it's an interesting question, and maybe some of it is still getting developed because the whole space is so new, and the big outcomes and the returns everybody has to still experience, and therefore see what exactly panned out versus what models were predicted. Having said that, the 2 3 variables that matter. One is, obviously, we spoke about longer gestation periods to build, etc. So you need patience, you need time, fund life cycles. Correct. I think across the board globally, there is an understanding and there is a push towards slightly longer and longer funds like life cycles. Funds used to do 6+2, 7+2, 8+2 is quite standard, which is where we operate. I think people are going beyond 10 years also in fund life cycles. There are some very, very few cases, maybe depending on who the LPs are. People are even pushing to 15. In the minority, but pushing, right? So you're first pushing the horizons of what is the definition of
Sequoia took it the
yeah, so that's having the
whole way,
rolling
right?
and having more flexibility of holding on, etc. But time horizons matter, so VCs are also adapting, and LPs have to adapt to it. It's a conversation, but I think it's happening. I think the 6+2 probably time is gone. Mostly, I think 10 years areas is quite common these days, and which is not bad. Which is quite a median, good enough number where value can be created and outcomes can be found for VCs, right? 10 years is not a short period of time. You can build a product, even if it is slowly, take it to market, commercialize, get revenues, and get to some level of scale. Therefore, value creation should happen. Correct? So it's non trivial. Now, the nuance there, which we are learning and observing, may be unlike consumer or regular software, B2B or fintech or a bunch of other areas. The catch could be that in the, let's say, 8 to 10 year time frame, what happens in the first 3 4 5 years versus what happens in the next 4 5 years, right? In mainstream technology areas or tech enabled domains and sectors, it is very quick to go to market, which means value appreciation can happen quicker, which means you put a product out in 6 months, you get customers, you get a next round of capital, your valuation goes up, Series A happens quicker, Series B happens like every 1 to 2 years, right? And if you hit, if your customer adopts the product quickly, right, and you hit that, you could hit hockey stick, so to speak, inflection point very early. Correct? Now, in deep tech, that I think can still happen. It'll just happen slightly later. Correct? So we believe that the first 2 to 4 years is slow. It's sort of a slow uptick of value creation. It is because you're building technology and you are slowly reducing technology risk. Therefore, value appreciation is slowly reducing, but commercial and market validation and risk hasn't been taken care of. Right? So it'll be slightly patient and super slow in the early days. Let's say 1 year, 2 years, 3 years, 4 years. But like we spoke earlier, because the product is so good, when you hit the customer, if the customer adopts it, then there should be very strong pull. Then after 4 year, 5 years, at that 4, 5, 6 years, there we believe there should be inflection point. Right? So this difference is when do you hit inflection point? In essence, we do not believe the outcomes are any different. Outcomes are only slightly later, and that has to be modeled in the returns you expect. Right? We believe similar outcomes are possible. $1 billion outcomes, multi-billion-dollar outcomes. Because again, you're building a phenomenal product, great moats, great margins, low competition. You should be industry leaders. Right? Such companies, the best of these companies should go out and capture a lot of the market. There should be pull from customers. There should be premium pricing. There should be pricing power. When they do that, and once they hit the market, they should really ramp up on revenues and they should get great multiples in the markets. Correct? Whether it is late stage capital, whether it is private equity, whether it is public markets. Right? And therefore, there is no reason hardware, deep tech companies cannot build category defining, disproportionate value creation, billions and multi-billion-dollar companies over a longer period of time. Right? One has to understand that may not happen in the first 4 or 5 years of building of a company. If we balance that out, there's definite value creation.
Right. Yeah, and it's quite different from, let's say, SaaS or e-commerce or wherever, right? I mean, where you roughly expect a fundraise cycle every couple of years for a fast-growing startup. People love space tech. I mean,
it is cool, right? When we all
whenever we talk about it, I mean, it's the most response we ever get. So it's 2023 and the market is still a little tepid. The growth size checks have not come in.
Yes.
Right? I mean, it's hard enough for, let's say, conventional sectors like SaaS and e-commerce or whatever, but for deep tech, how do you convince your growth funds and the others that they should come in and put in maybe like a 40 million or $100 million check into one of your startups?
No, I think great question, very relevant question for us. We grapple with it on a regular basis. We have a large enough portfolio, and they're in so many new sectors and hard sectors that it's not intuitive to everybody, right? And by everybody, I mean some of the larger funds when they need growth capital, right? I know some of these ceilings are starting to break, and larger funds are starting to get interested. Maybe in a way, it's a boon, right? That this correction has happened, and we've gone through some tough times after a very long and extended so-called bull run, correct? And I would say the positive way to look at it is when the other sectors start looking less exciting for growth capital providers, then they do start looking to newer areas where there is alpha creation possible. Correct? And that can bring and is bringing the limelight to deep tech, right? Is a good early sign that we are seeing over the last few quarters, right? Because like you said, consumers hard, it guzzles so much money, right? SaaS multiples have reduced, then you worry about how much can we do, so on and so forth, right? So that is one. Having said that, I think the biggest, hurdle to cross is if the larger funds that are horizontal and that do everything, if they haven't spent time on deep tech, right, historically, and built deep thesis, and most importantly, do not have, the ability or the experience of understanding technical risk, right, then it'll be a slower process. And that is what we have experienced ourselves, right? That it takes time to educate them on the nature of the technical risk involved, correct, and why they should come in at what point in time to still give certain decent amount of dollars. So either it is an inability or uh, not lack of readiness of articulating and understanding technical risk, right? And I think the burden falls on, and rightly so, on the founders to make it easier for the new investors who are starting to do this, to help them understand what the nature of the risk is, what the nature of the technical risk is, and break it down further and further, simplify it so that they're able to understand and simplify it and then take that chance. That is number one. Number two, sometimes just the timing has to be right, correct? For example, 6 years ago, EV was deep tech. It doesn't seem like EV is deep tech anymore, right? EV is mainstream because market has arrived. The demand is here. Consumer demand, B2B demand, fleet demand, right? Two-wheeler, three-wheeler, four-wheeler,
Yeah.
battery systems, charging ecosystem, so on, is just here.
If you told me 5 years back that I would drive a hybrid, I mean, I would.
Exactly. So sometimes there is a tipping point, like we said, it is market demand, policy, enough good products in the market. Aether was early, Ultraviolet was early, Ola has come in, some others are coming. There are options. Not to mention the incumbents who are the old OEMs, right? The Tatas are building, the TVSs are building, Mahindras are building, Hero is building, everybody is building, right? Because the demand is here, right? And when that happens, when the market is super clear, particularly for large growth investors, they also sometimes, we believe, and I think it's better to ask a large investor, but I'm making a guess here, they don't like to take disproportionate market risk. Is the market ready or not? Right? If the answer is I don't know or maybe, right, or no, of course, right, then I don't think big capital will come in, right? But if the answer is wow, it is here, there is clear signs that it is here, then growth capital will come in. There is no question about it. And I think we have seen it in multiple examples. EV, like we just spoke, just there is, like I said, EV is not deep tech anymore. It was when we started investing, right? Space is also the same thing. They're just now where it's an inflection point. I would say just the last 12 months, first test launches have happened, few satellites have been launched, revenue has started coming for companies. There's not 5-10 companies in India in space tech. There's probably 40, 50, 60 companies, maybe more, right? It's just all signs pointing to market is here. And customers are saying, I want Earth observation data, right? I want communication. I want this, right? And the enterprise customers, and I'm willing to pay dollars. So when all of this comes in, no question. I would say example of also green hydrogen, right? Maybe hydrogen fuel cells for mobility is not here market-wise. But like we were just discussing a little while ago of this thing, Ambani's, Adani's, PSUs for oil and gas, for ammonia, for different use cases, in industrial use cases, hydrogen demand is through the roof, and everybody wants it to be green hydrogen. So this is the right time to be building green hydrogen, either solutions. So I think market readiness and being closer and closer to have visibility for very strong market readiness is important for large investors to come in, and we will see that sector by sector, one at a time, every year, with inflection points and with convergence of real data points on the ground. And that is when the larger investors really ramp up and say focus, right? And we're already starting to see that, right? If you see the last 6 months to 12 months of how the mega funds in the country, who they are not too many, right? There are a handful of them, and hopefully those numbers are growing and will grow. And when they start looking at newer thesis, subsectors, build thesis, spend time. It's a factor of time. You need to spend time on any new area to build conviction, speak to many founders. And that's a heartening sign that there are many founders and the investors are spending time. And the founders and people like us who took early bets, we start acting like mouthpieces. We are evangelizing, right, through forums like this, that telling larger investors, hey, come in, guys, it's very exciting, correct? So it's our job.
Right. Last couple of questions. I know you have to get to a meeting. For a founder listening or watching to this discussion, right, this conversation, how should they approach fundraising in 2023 versus how they previously looked at fundraising? From an investor perspective, what are those things that you're looking for now that you weren't looking for earlier, and how could they improve their chances of getting funded?
Now, I may spew out some cliches, but hopefully there'll be some new stuff also there. But, you know, what is extremely clear to everybody, right, is 2020 and 2021 were clear anomalies. Yeah. Correct? It's not going to come back. It's not going to come back. So don't, first piece of advice, don't expect that it will come back, right? And drop that so-called hangover of it was there, maybe it'll come back 6 months later, maybe a year later, maybe I'm an exception, I still deserve those valuations or in those vicinities, right? So please be very, very practical, very brutally self-reflective as a founder to say, what is my value prop? How good is my product? How great is my traction? Right? Why am I differentiated in the market? And therefore, am I in the top quartile / top decile of companies out there in the market trying to raise money? And therefore, what capital do I deserve and for what outcomes? Correct? At what valuation? So definitely temper valuation expectations, right? I would say don't even worry about valuations. I'll just say just focus on real high quality, efficient, frugal execution, and then build a plan for the future to continue to execute in that fashion, and then come up with what you need to hit key milestones of growth as well as balance of great efficient growth, right? The trade off is in investors will look at you kindly even in today's environment in 23 24. If even if you don't have 80% growth, let's say 80% 100% growth, you're in early stage, but you have 30 40 50% growth, but your economics are very strong, you are not burning a lot of money, your CAC is well under control, correct, and there is very strong pipeline of customers and your customers are loving it, and your innovation quotient within your organization on tech and product continues to be best of breed. If these ingredients are there, you can trade off 20 30 40% growth rates, right, and have slightly lesser growth rates, but with these other ingredients you are still a very attractive company for investors to invest at moderate to approachable valuations, correct, and build for the long haul, and so that everybody wins, right? And build for the long haul, not to worry about am I becoming a unicorn in 3 years, 4 years. Just build value. Just disproportionately think about every dollar that I use and I raise, right? Can I put it to use for extreme efficiency for great output? If a dollar was earlier, to earn a dollar, you probably were spending, the world had become crazy. You're spending $3, $5, $10, $15, right? Now really think hard about can you make every additional dollar count, right? And input going into $1 in, $1 out. I know in the early to mid stages of growth, you still need not have to get profitable, right? But if your efficiency rates in terms of how you use the next round of capital and the longer you're able to make it last, right, and you're able to get to better milestones, you're going to be in better place. That would be the thing. And then of course I would also say for founders, really find partners, correct? All money is not equal. Find partners who believe in you, who believe in your vision for the longer haul, and therefore the onus is also on the founders to build relationships, right? Deals are not going to get done in 2 weeks. In a short span of time, you introduce yourself, tell a story, 3 meetings, and you're done, and you'll get 3 term sheets. It's not going to happen, right? So be prepared for a longer time frame to raise capital, and it's better for you if you go out, meet multiple investors. It's like sort of courtship period, dating period before you get married, right? And that's what it is. It's a long partnership. So go out, find the right partners, find who you like, find who really likes you, who resonates with your style of building a business, and who can really add value to you. And when that happens, there is magic that is possible. Correct? And for that, spend 6 months, spend 1 year, really engage with people, keep a cadence with them, keep updating them of your progress. So what if you're raising capital next year? Keep them updated of your progress this year. Tell them whenever you have a big win, right? Hey, you hired a great candidate, right? Tell them that you convinced a great candidate to quit Google and join you for half the salary, right? That's a signal to say, wow, this founder is convincing some very smart people and building a great, talent pool. Second, we got a great customer. We cracked a customer in 3 months. This is a high value customer. We have landed it at X dollar, contract. Next year, I think this contract value can be 2x or 3x or next, right? Oh, then we built this new version of the product. It is so disruptive. It is so much better than competition. Our efficiency has gone up 5x, correct? Our cost has come down 3x. Just keep people excited about what you are building, and you will learn that the investors that respond to that and reciprocate, right, is your shortlist. And when the time is right, you don't really have to then go through an elaborate fundraise process. You just have to give the additional details and then tell the rest of the plan, and just the final thing is just a negotiation. Honestly, price, negotiation, valuation is the last thing to worry about, and are the easiest things to solve for once you found the right partner, right? So these are things I would say founders can keep in mind in these not so easy times, right? And get past these. Some better times will come. We don't know when, unfortunately. We're not market gurus or macro gurus, but be around. Just don't die. And, if you're there on the other side of this storm, right, then you're going to build an immensely valuable business.
The first order of business is to survive, right?
Simple.
Yeah.
Hard to do, but simple.
One final question before we let you go. Investing has these ups and downs. You had the crazy 2021 highs, and you have a correction and then a lull afterwards, right? I mean, I often wonder with VC investing, with as much ambiguity baked in already, right? How does one keep an even keel during these ups and downs? How do you stay true to your convictions, and how do you not get swayed away by FOMO and by all of these market forces pulling at you, tugging at you? How do you deal with all of these demons?
Well, it's human psychology, isn't it? It's never easy, right? And I'm not saying we are perfect. It's not like we have not made mistakes. We are also, it hits us every day. Hey, we are sticking to our guns. We think this is the right way of, these are the right type of businesses to invest in. These are the right types of technologies and areas. And we see some other sectors or some other type of companies, and maybe they got really quick up rounds. They raised disproportionate capital. They got great valuations, and we say, hey, are we doing the right thing? So we do question ourselves. But the important thing is, I think, like you said, to remember that it's a long game. Correct? VC fund cycles are anyway 10 years and beyond. We don't know if we are making the right decisions until 8-10 years of a fund cycle, right? We can be excited about the investments that we made, and we have to work with them every day. But these companies also go through roller coaster rides, right? They have 2 great years, then they have 2 very tough years. Sometimes macro, sometimes micro, right? Sometimes related to competition, sometimes related to some weird dynamics, right? Anything can go wrong, right? Building a great company is like 50 things have to fall right, and you need to get lucky, right? So it's not all in your control. So first acknowledge that, right? Be disciplined about things, be rigorous about things. Just show up every day. Just show up every day. In our philosophy, really, we as a firm build a knowledge oriented firm, because that's the only way for us to keep our edge, to keep our conviction. Because the more knowledge we have, the more learning we have, the more confident we are in the areas that we are picking, in the companies that we are picking, and in the how we can help them once we have invested. So I think knowledge is the path to differentiation, and is the path to try to keep the noise out, right? And say, hey, let's remember, we know enough. We have to be patient. The knowledge tells us and the data on ground tells us that it'll take time, but it's in the right direction. So therefore, don't get caught up in the short-term valuation game or the FOMO game, right? Yes, you can read those signals, you can feel bad temporarily, but put it out at night, go to bed thinking, hey, we learned as much as we could. We spent time with the founders. We helped them, right? We built our next thesis. We spent 2 years to build this thesis. We spoke to 50 people to build this thesis, right? And then we made a decision. Don't, because of timing, because of market and FOMO, don't ever cut short your diligence times, right? So it is like, I guess, who says that? Mahendra Singh Dhoni says, right? If you put in the input, focus on the input. Try to leave the output because it's so many things not in your control. Leave it to, you know, whatever happens, right? But focus on the inputs and just do it over a really long period of time, right? And then I think results will come, right? Believe in the process. Not easy. And in our case, it's also important for us, for everybody in the firm to believe the same thing. Correct? So team matters, DNA matters, right? And as long as we're all speaking the same language, we're all thinking the same thing and playing the long game, correct? And for the right incentives, right? Then hopefully the FOMO, short-term FOMO, we should be able to overcome. No magic mantra. That's the only way. No shortcuts.
Right. Fantastic. That's a great note to end the podcast on, Arjun. I mean, this was a fun conversation. Really, there's just so many nuances that we picked up today that I'll be reflecting upon, and hopefully we'll host a bunch of your portfolio founders as well.
That would be amazing. They'll be more interesting than me to speak to, right? For the listeners. And thanks for having me. This was a great conversation. I think you brought out a lot of points that we think about, as well as some we have to continue to figure out. Fantastic. Right? So really excited, and thank you for having me.
Awesome. Thanks so much, Arjun.
Thank you.
Thank you, everyone. I'll see you guys again on another episode of the Startup Operator podcast. Don't forget to follow us, subscribe to us on all your favorite platforms. See you soon.